Good evening, traders. It is Sunday, April 19th. Thought I would do a little bit of market analysis, see how the overseas markets are doing. Right now, we've got the S&P 500 futures down about 20 points, so it looks like we're going to have a little bit of a soft opening. Let's take a look at the market, see what's going on, see if we can get some bearings here. We had a really nice market breakout. We had this cup and handle formation here. SPY 260-250 was the level. We had a rally higher, and then didn't last long. Tiny little bodies. These are dojis right in here. The close is very close to the open, and you can see this compression right in here. Friday, we had a nice big gap up, and we actually got through this resistance point, but not convincingly. Took a lot of effort in a late day buy program on Friday to push us through. Now, the news that sparked all of that buying was that much of the country was going to start trying to reopen the first week in May. That is fantastic news. There was also some positive news on a drug being produced by Gilead Sciences. That also was very good news, but the market wasn't quite buying it. And I'll show you why. We'll go into that 5-minute chart, take a look at what was happening during the day. You can see the opening gap higher and then selling. And actually, later in the day, it looked like we might reverse lower and start to float into the gap right here. We did not. That support from earlier in the day held, and then we had huge buying volume into the close. So that's really what saved the day. I think that the market's going to start running into some problems. So I'm going to go back to the daily chart and I'll talk about the fundamentals just a little bit. Right now, we know that the coronavirus is improving and the statistics are improving. That was expected. That's what prompted the first leg of this rally back. We're still not out of the woods. There are a lot of states that are extending the lockdown every week that this lockdown gets extended. Makes it exponentially more difficult for us to recover economically. So every single week is going to make a monumental difference. Don't lose sight of that. We are not by any means out of the woods. We haven't even started to recover yet. Businesses are trying to get the loans from the country, and it looks like there's going to be another 250, $300 billion allocated to it. I'm expecting Congress to approve those loans sometime this week. That'll be good news. Probably will provide a little bit of upward impetus for the market, and then we'll be into mega cap tech earnings. So we'll have Facebook and Microsoft, Amazon, Netflix next week. Now I'm expecting all of those companies to do quite well. Out of all of the major mega cap tech stocks, I think Apple's probably got the weakest prospect for putting together a good number. Supply disruptions are part of it. Apple stores being closed, lower consumer discretionary spending on new phones. Those are all issues that they have. But Google, Facebook, it's going to be a lot of people surfing social media, so I think they'll do pretty well, although I'm hearing that the ad revenues for Google and Facebook are down. So I think that we need to tread very cautiously. Typically, as earnings season goes, you see it very front end loaded, and after the big tech stocks announce, there's air that's let out of the balloon. And nobody that's a shorter or a seller wants to sell before those mega cap tech earnings are out. So I think that we're going to start hitting some resistance in probably another week to 2 weeks. We do still have a little bit of upside to the market. Let's go into a weekly chart and you can see that first target that I had at the 100 week moving average at SPY 288. That could hold. We took profits on our SPY position last week. We made about a 25% return. We bought down here at the 238 level. That was a gorgeous return on that trade. So why risk it? Let's go to the sidelines. There's going to be an awful lot that needs to be resolved. We don't know how fast the businesses are going to get back online, how quickly they're going to rehire their employees. And I believe that consumer spending is going to stay very muted for a long period of time. People want to know that their jobs are secure before they start spending money again. So That is one resistance level that we're just at right now at that 288 level. And if I go back to the daily chart, you'll see that the 100-day and 200-day moving averages come into play right around the 300 level. Could we get that high? Maybe, but I think it's going to be very, very stretched. So as we get closer and closer to that level, I'm going to get a little bit more and more bearish. Right now, I think we got a week left of market rally, and I'm going to show you a search that'll help us find great trades. So longer term, we have been selling out of the money naked puts. We had a ton of them expire on Friday. That's great. We've got a number of them still on, but probably a quarter of our original amount. So that's been a great strategy. I've got a quick little trade that I'm looking at for a swing trade, but I want to show you a search that we're going to be using extensively as earnings are reported. Option Stalker has a ton of earnings searches that you can use, but I want to keep this video very short, so I'm going to go into the bullish searches and I'm going to scroll down and we're going to click on strong after earnings. And these will be our candidates, and these stocks are up after reporting earnings. So we're looking for that gap higher, we're looking for that gap to be preserved, and these companies have announced earnings in the last 2 weeks. So with everyone that's on deck this week, this list is going to continue to grow, and it is a gold mine, trust me. So I quickly went through the list, going to click on J&J. And you can see how that's the earnings report right there. We have the B designating that it was before the open, and the stock has been able to grind higher very nicely. Posted a great number. They've got a strong balance sheet. Going to go into stock ER. You can see they've got a lot of cash per share, $7.58, $10.88 in debt. So strong balance sheet, forward PE of 15. I like the earnings reaction. So that tells me that there are buyers who want to be in this stock. So how do we play this? Well, you can see that there's a 142.50 strike price that's right at that 100-day moving average. I believe that 100-day moving average is going to hold. I don't want to be out there for a long period of time with all the market uncertainty, so I'm looking to be in and out of this trade very, very quickly. I'm going to put up the option chain, so I'm going to click trade, and the option chain is going to load for me, and I'm going to be looking at the April 24th expiration date. Again, I want to keep this very, very short term. I want maximum time decay on this position. And I'm going to go down to the 142 strike price. I'm going to click on that bid. Remember, 142 is below the 100-day moving average. Actually, you can see the 100-day moving average is 141.70. So let's make sure that we're below it. And you can see the black line right here is that 100-day moving average on the option chain. You can also see that 140 is one standard deviation away. So let's try and stay a standard deviation away. Let's go down to the 140 strike and give ourselves a little bit more breathing room right in there. Now, I don't know if we'll be able to get this spread done, but we're going to be selling the 140 put on J&J, and we're going to be buying the 139 put on J&J, and we're going to be trying to do this for, there's $1 between the strike prices. I always like to generate a 25% return. We're going to be trying to get a 20-cent credit for this. So I'm going to plug that in. You can see it's 15 cents bid offered at $1.11. Who knows where the thing's actually trading? All I know is I want to get 20 cents credit for this. If I can get it tomorrow, I'm going to take that trade. So this is a trade for Monday morning. I would suggest putting it in. If you get filled on Monday, fantastic. If you're not filled by midday, cancel the order. I'm betting that J&J will pull back a little bit with the market tomorrow morning, and we may have a chance. Our best chance to get that trade off will be early in the day. If we don't get it filled, cancel it. Well, why would you cancel it? If you liked it early in the day, why would you cancel it? Because what happens is we're looking for that time decay to already start chewing away at that position. And if we got filled Monday afternoon or Tuesday, well, then the stock would have had to move dramatically lower in order for us to get that credit. And we don't want to take that risk. We don't want to see the stock continuing to float lower and float lower. This is a one-shot deal. We're looking for a possible pullback on Monday morning. We want to get filled. Market finds support. We're in, and then we've only got 4.5 days left till expiration. We're in a good position. Strong company, strong stock, earnings behind us, earnings reaction good. And that allows us to get through the week, kind of see how all the other earnings announcements have come out, knowing that probably within the next week to 2 weeks, if the market continues to stretch and surge higher, I'm probably going to be looking to do a lot more bearish call spreads, but I want to see the number. I want to see those earnings reports come out. I want to be able to see what their guidance is, and then I'll be able to judge the market reaction and know how close we are to possibly hitting a short-term top and whether that's the strategy that we need to employ. So don't go getting real aggressive buying puts or anything like that. The market's still got some upside to it, but I think it's fairly limited in here. That's all I've got for you tonight. Thanks so much for watching. If you like the content, please give it a thumbs up. Make sure you subscribe to the YouTube channel and turn on your notifications. That way you'll never miss one of these videos. Thank you. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.